now, and it's all here. We saw the excitement yesterday with the exit poll outcome. If everything's supposed to go as per plan, then we are setting ourselves up for a very exciting morning, guys.
Yeah, I wish some of our viewers could be in a newsroom today because really the place to be in, maybe a dealing room, maybe a newsroom, just the chatter and the buzz around what and the anticipation around what could be is palpable as you walk in. But yeah, it's a big day today, and well, it's imperative for the seats to follow what the exit polls are saying for the markets to sustain. Let's see if that happens.
Sustain, not rally further.
Or rally further.
So that is the big question, right? After yesterday's, I would say in some parts, insane rally and complete, thumbs up to the exit polls. Can you have that kind of a momentum sustaining, and what would the numbers have to show? Now, before we get to anything else, I did this piece with Alex in the morning. Just a quick picture on by when you can see a fair enough picture of what the results are and how it all happens. So you see leads initially on your screen. In fact, all those numbers that you're seeing will be leads, and then they will be converting into seats. And those leads come as per the rounds of voting which happens, which is every 14 EVMs counted is one round. The more larger the population of that constituency, the more rounds they are, etc., etc. If there is a clear one-way sweep and the exit polls follow through, maybe by between 10:30 to 11, you should see a fair enough picture. If it's a tighter race, then maybe mid-afternoon or even later, because systemically we've become very efficient right now, actually at counting votes. Now, at 8 o'clock, the first leads you will see, and this is important, is from postal ballots. It's not from the EVMs. And what are postal ballots? Postal ballots are votes cast by those in the military, by people who are too weak or sick to go to the polling booth. There are exceptions made for such people, for those who are in election duty and they can vote, by remote, and even those who have been imprisoned before they got a chance to cast their vote. So that's the first cut that you will see. So maybe by 10:30, you might get a clearer picture. Maybe later. I think last time round the election was called by about 10:15, 10:30 or so.
I remember 2019 when I was anchoring, 9:30. There was a clear indication of what the verdict is. So it'll be interesting to see if the same thing happens today.
Yeah, so that means you have an overwhelming one-side kind of sweep, because your actual EVM votes will not even be counted before 8:30, 8:45.
Yeah.
So technically, you will have to wait for some of that dust to settle. But anyway, before we start the day, and we have a fantastic lineup, I thought we'll just play some of the global cues for you. I know all focus is on India. Frankly, the world's focus is as well on India. But overnight cues from the US have been mixed, is all I can say, a bit sluggish. Actually on the key indices, but bond yields have slipped below 4.4% on the 10-year. That's because of the manufacturing data that came out of the US. Crude is down nearly 3% because the OPEC Plus has decided to ease off their production cuts from October. So if I were looking at the setup for what is anyway going to be a very important day, it's largely, I would say, at least on crude and yields, positive. Asia also opening weak, in anticipation of what India will do, because we are the story that the world is watching today. And just from yesterday's trade, I was very keen to see the fund flow number, and I'll just pull that up once for our viewers. Because remember the kind of volumes and gains that we had seen. And you had actually FIIs buying yesterday, as would have been expected, 6,851 crores, not massive compared to what buys we've seen in the past, but significant if you compare to the rest of the time. And DI is also buying 1,914 crores. So if it was that short covering that we've been talking about, maybe that's not fully done yet.
Yeah, most certainly. And, so the trend is very strong, and there are 2 or 3 quant indicators that are available. If you just look at those quant indicators, we are not in an extreme greed zone as yet. I don't know if by end of the day today, depending on positioning, we might be. But for now, we are not in the extreme greed zone as yet. And somehow I think it's just a very difficult call, very difficult to take a very strong negative call on valuations per se. And just here's some very basic data. If you look at the FY25 EPS estimate of 1150, this is the consensus of about 14% earnings growth based on 1,005 rupees for FY24. So if you clock in 1150 as EPS for FY25, at various levels, right? 23,500, 24,000 or 23,250 is the first row. Look at the P multiples, 22.22 to 20.87. On that higher base, viewers, if the index moves from 23 to 24,000, the P multiple doesn't expand by 2-3%. It just moves up marginally at that. And at 20.8, are we very, very expensive relative to history? No, we are not. We're certainly not. India anyways trades at premium multiples. That's part one. And part two, if you just take into account slightly forward and look at FY24, 25, 26 at an average level of 23,500 for the Nifty. Remember, 6 months out, we will be looking at FY26 earnings. We are trading at 18 times. So we are not expensive by a, in a massive way. And I think that is something to take heart from.
Like I say, Neeraj, you're an eternal optimist. When you compare us to China, we may look expensive, but just to number...
With reason.
With reason, one could argue, but of course, growth's got to keep up that momentum over the next couple of quarters or years. Just to quantify everything that we've talked about, and while I know the euphoria is on the street, implied Nifty is indicating to a marginal gap up. So it doesn't look as excited or euphoric like it did in yesterday's day of trade. Remember, yesterday we opened up 10x of that. So implied Nifty was a 800-point gap up in terms of trade. This morning, it's a little more realistic at 85 points. In terms of what we've seen yesterday, the NSE's market cap rose above $5 trillion for the very first time. Significant wealth was created for investors. And of course, to number that, you had huge wealth being created with stocks like HDFC Bank, Reliance Industries, SBI, ICICI, L&T that contributed to that big move on the index. FPIs have cut their index future hedges by 121,000 to bring it down to 196,000. And also what we did see that the net short index calls and index put options by 688,000 and 401,000, clearly indicating that they are hedging their bets even now. So if there is a big swing on either sides, they are covered on both ends. In terms of one option data that stood out for me, so if you look at Nifty option expiry for 6th of June, the open interest put call ratio stands at 0.89, which implies that for 89 puts that were sold, for every 100 call, 89 puts were being bought for about 100 puts being sold. Very clearly indicating that the market participants aren't expecting a runaway rally in today's day of trade. So this is just one of the data points I picked up on. So from what we see it will be a positive move if everything turns out as anticipated. But of course, the markets are going to be prepared for any sort of downtick, and there could be some profit taking. And I think that's a fair assumption after a 3.5% up move yesterday, if all goes as planned. What does an investor do, or what does a trader do? I mean, this is not even about investors anymore, right? Because you don't want to get played into big events like these. Valuations are expensive. We'll get the FI view. You're an eternal optimist, like I've argued. But nevertheless, it looks like it could be a morning where we do get a gap up. Markets will remain volatile. But it wouldn't surprise me if we don't actually end up today like we did yesterday.
So maybe not too much of profit booking as well.
Numbers, it depends on the numbers, guys.
But let's...
If you are going to supersede what the election exit polls are saying, then that is going to be a different mood, and you can't say that there is no likelihood of it. That's all I would say.
Yeah. Well, let's ask an FII, since we're talking about that. Robert Sawkins, senior global economist who looks at markets as well very closely at Citi Research, joins in with a quick perspective. Robert, good evening to you, and thanks so much for joining again. How are you looking at this election verdict in India? Because we do believe, I mean, we out here believe the world is looking at India, and rightly so. But what is it that you're watching out for today when it comes to the election verdict?
I think it's extremely important election, as you said. Not just India is watching it closely, but the world is watching it closely. And I think if the numbers that we've seen are any indication, it looks like the Modi government is not only going to win fairly strongly, but maybe even hit that very ambitious target that Modi had put out of 400 seats. And so we're watching closely the extent of the victory at this stage. I think victory is very likely, but the question is, what type of a mandate does the Modi government get as the final numbers or official numbers come out? And then, of course, I think it's going to be a question of, beyond that, what is policy going to look like? India has been one of the best performers in the world in terms of growth. We recently marked up India growth again off of very strong numbers. I think the Modi government, again, will be a continuity government, but we'll have to wait probably until the July budget to get a better sense of if there's going to be any more ambitious or different policies following the election win. But broadly speaking, I think India is in a very positive place, and I think that's likely to continue.
Robert, in that case, while you're constructive on the political outcome in India, what's your portfolio strategy with regard to Indian equity and Indian debt as we stand today?
Yeah, absolutely. And, we've talked on these issues before. I think there is scope for both India equity and India debt to be attractive additions to portfolios. Some of the issues that we've talked about before on the debt side, of course, government that's has a strong eye towards consolidating the budget, but also boosting growth. And at the same time, the inclusion of India into important bond index is also very constructive. And on the equity side, as I mentioned, the India growth story has been very positive and is likely to continue to be very positive in the years to come, especially as they have supported demographics, government policy that's looking to grow certain manufacturing industries. So I think broadly speaking, India can be a very positive story on both the debt and the equity side, and I would be fairly constructive on both.
Robert, hi, Tamanna here. Now, before I come to you with the question, I just want to mark the implied open, which has now jumped up in the last few minutes, even as the leads are coming in thick and fast. Now you've gone to 130 for your implied open. When we started the show less than about 10 minutes ago, it was at 73. And what is contributing to it is perhaps the numbers you're seeing on the side of your screen, which is your first count of postal ballots already. So remember, we're going to get it right. That's more important than perhaps having a big number out there straight away. You're going to get accurate numbers here. So 16 for the NDA. These are leads, and I explained just a short while ago that postal ballots is what you count first. 7 for the India Alliance. So you're seeing a big gap already there. Only 24 of 543 have counted. Robert, my question to you, honestly, is about what the view is as far as India is concerned. You've seen 2 terms of the same government. You're in all likelihood going to see a third. What would you be watching in terms of what can be done in a third term, and what would drive that FII view? Now, we already know the basics are in place, right? The value of India as the third largest economy sooner than later has been sort of priced in. What next is my question.
Yeah, it's a really key topic. And I think as we talked about, it's going to be very important to see if Modi does win another term, as seems likely, and if he wins with a significant mandate, which also seems likely. How does he construct his vision for the future of India? And I think, as you said, there's a lot of building blocks in place that are very positive in terms of very supportive demographics, as I noted, and a variety of other tailwinds that are supporting the economy, including very recent strong performance. Now, what I'll be looking for that I think is very critical is how India looks forward to continue to support its manufacturing base. We're seeing globally a very important story, which is a continued shift away from China and toward other locations. You're seeing a lot of economies benefit from this restructuring of global supply chains and global trade and capital flows. The US has benefited from reshoring policies, Mexico, other economies in East Asia. And I think India is and can be a huge beneficiary of this restructuring. And you've seen the Modi government put some policies in place to support manufacturing there. I'd like to see, or I'm watching to see, how those policies are going to continue and how India can be a high-tech manufacturing base for the future of the global economy. So I think those are the key factors. There's a lot of key issues, of course, but I think those policies in particular given the moment that we're in now, where companies are thinking about this restructuring happening in the global economy, I think that's going to be critically important how the government plays those factors.
Robert, very quickly, policy continuity is more or less a given at this stage. Better than expected GDP growth as compared to most of our peers. Strong earnings, India's inclusion in the JPM bond index. I mean, the good news has come in thick and fast. In your opinion, what is a risk factor as an FI when you look at India? What could go wrong for us, if anything at all, at this stage?
Yeah, that's a great point. And as you said, the news has been broadly positive. It's been one of the most positive stories in the global economy, not just for emerging markets, but for the entire global economy in this cycle. And as you mentioned, and as we discussed, more news just keeps coming. And I think in terms of risk factors, I think it's going to be critical in the years ahead that the government puts in place policies that support growth. And as I said, that looks towards not just the short-term dynamics, but the long-term dynamics where it can benefit from its very positive demographic profile and the shifts in the global economy that I mentioned. And India has been growing very rapidly, but historically, many economies, as they've grown rapidly, eventually hit sort of middle income struggles that are hard to overcome. So I think for India, it's hard to find very challenging short-term issues that could really restrain the economy. But I think longer term, it's very important for the government to think about policies to continue to support growth, especially as the economy develops further and further, because we have seen from history that other economies have run into issues as they've continued to grow rapidly and develop. So I think the issues facing India, or the potential challenges, are really those medium to long-term issues.
Robert, one final question really. Assuming that the election verdict comes in as planned, at the current valuations, is India an avoid, or would you reckon at 2021 times, which is traditionally what India has always traded at, with the growth India is showing and the policy continuity, India is not an avoid but a buy?
Yeah. As we discussed, as you mentioned, I think given the very positive growth dynamics, given the potential for the continuity government to put in even more pro-growth policies in place, I think there's a strong argument for inclusion of India equities, even as you said, at these valuations. And I think when you look around the world, as we've discussed, India has continued to surprise expectations to the upside. Even just recently, as I noted, the growth came in much stronger than expected, and we marked up growth for this year, as well as our growth prospects for several years to come. So I think India keeps surprising the world with its resilience. And I think with that backdrop, that the equity market, even at these levels, could be very attractive if India is able to continue to deliver on this very positive growth story.
Most certainly. Robert, great having you today on a very important day. Thanks so much. And watch the election results. Although it might be late for you, but I'm guessing you won't be able to sleep either. We certainly can't. Forget sleeping. But so excited about the trade today, guys. And two gentlemen with us in our studios through the day today to take us through what they believe the leads and the eventual outcome would be. Kush Bora, founder of kushbora.com, and Aditya Shah, founder of Hercules Advisors. Gentlemen, both of you, thanks so much for joining in. Aditya, can I start off with you? Assuming that the numbers come out as everybody's thinking of, are you going to add to your portfolios today, or are you going to use the rally as an opportunity to liquidate some of your positions?
Neeraj, I am a long-term optimist, and I remember Mr. Rakesh Jhunjhunwala giving an interview to you that we are on a bull market from Bombay to Delhi, and we've just reached Borivali. So the potential in the Indian economy is just starting to come out, and the long-term continuity of the policy will be very, very important in the next 10 to 20 years. We've seen the Indian economy, we will see the Indian economy do really well over the next 5 to 10 years. The government will come and invest in a lot of infrastructure projects, in a lot of economy per se. So this rally will be an opportunity for us to add, and we have to be bullish on India for the next 5 to 10 years. So I will be adding in a staggered way. Valuations are expensive, as you were saying, even though the index is at 20 times, small caps and mid cap valuations are above the mean levels, and you have to be really very careful. Having said that, this is going to be a roaring bull market, and as Manish Chokhani really says, India is going to be the bubble market for the next 20 years. So you need to remain invested in the market and add in a very staggered way. I am very, very bullish on the economy, at least for the next 10 to 20 years.
Aditya, that was a very large, big statesman type statement, sounding like, Mr. Jhunjhunwala, usi line mein. That is excellent. But what to do today?
See, what is going to happen today is that maybe the current government is to come in, and the market somewhat will have a positive view on the current government coming in. So my view is that you need to look at good companies, and if for any chance you get a correction on these good companies, you need to add, and you need to have the valuations are aggressive. So the only counteract to that is that you need to have a longer term horizon. And as Vijay
Name 5 of these.
So you need to be bullish on the large private sector banks. We have HDFC Bank, we have Kotak Bank, which have not done too well over the last 1 or 2 years. You need to be bullish on the pharma side of it. You need to be bullish on the chemical side of it, on the FMCG side of it. So the theme really is bet on India.
But you're buying value. You're not buying expensive stocks?
No, not
from
really.
Everything that you mentioned right now.
Exactly. So I'm trying to find value in pockets. Also, I'm trying to play the infrastructure space, because we've seen the government spending 5.5 lakh crores on the infrastructure side of in FY19, and in this interim budget, the government has spent about 11 lakh crores. So the government is pumping in money into the economy, and that's really very important, and we will see continuity of this policy that is going to come in. So we need to bet on the Indian economy. That is the broader theme that I'm really looking at. And you need to invest in high quality companies which are going to deliver earnings of 15 to 20%. The market will continue to re-rate these stocks over a period of time.
Kush, I'll start with you. 3.5%, almost 3.5% up move yesterday. Implied Nifty is indicating to a 150-point gap up opening. 23,500 calls have been most active at this stage. So if you've been long the index, say from Friday or even yesterday, what do you do in opening trade? If you haven't been long and the numbers stack up the way they do, and we'll get a better sense of it by 10:30, do you initiate fresh longs? So one, do you take profits off the table if you're in the money? If you haven't initiated a trade, would you go long?
So, Samina, first of all, very good morning to everyone, to all the viewers. Just before I answer that, this is the first time I felt that, a newsroom has just about the same energy as a dealing room on a big day. Okay, the moment I walked in, the energy was wow. To answer your question very specifically, I think my theme for the day is take money off the table. Now, it could happen in a very different way depending on how the outcome goes and how the markets react to it. What I'm looking at are 2-3 things. One, I am looking at placing trailing stop losses wherever I can. 2, I am looking at perhaps intraday hedging as well. The numbers right now seem pretty neck to neck, right? I mean, this is too early. They seem neck to neck. But you've also got to factor for even a 5% probability outcome as well. So I'll be looking at an intraday hedging as well. Do I go long from here? I think the time to go long was yesterday.
Yes.
And that is perhaps done and dusted. But let me also keep the event aside. I know it's a huge event, and that's what we are all here for. But just for a second, let me just keep the event aside and look at the data. Let me put on my trader hat, my technical analyst hat, and look at pure data. I heard you saying that the PCR for Nifty is about 0.8, 0.9, correct? My data shows one pretty much similar. The Bank Nifty PCR is just about 0.8. RSI on Nifty is 67. RSI on Bank Nifty after the kind of rally that we saw is 72. What that is suggesting is, is there room for upside? For sure there is. I mean,
we've not sure, right?
Banks for sure. Yeah, but even then, I mean, limited could be 23,800 to 24,400 on Nifty.
24,400 on the Nifty.
Why not? I mean, if the markets were to go berserk, why not?
You are really bearish,
I'm just trying to be realistic. I know, I'm trying to be realistic. The point is, you will get a gap up in the first in the first 1 hour of trade.
Sure.
If you hit 23,500, what do you think a trader would be thinking at that stage?
I'm not looking at 23,500, Samina. I'm not even looking at 23,500. I'll tell you why.
And this is just today. I'm not talking about a June 6th or a June 27th expiry.
Aditya has already covered the global
He's
side of
talking
things.
about 10 years.
So, yeah, exactly. So I'm everything that I
You have to talk hours now with us.
Absolutely. So everything I'm saying is for today, relevant
Okay.
only for today. I fall in his camp where we are in a massive bull run. All of that is fine. But as a trader,
but that is the valuable input. That what do you do today?
Today.
The India story.
Correct.
The India story is of course fantastic, and we just pulled that up in the middle of all of this data. Just
I think, Kush, you want to just complete
No,
your
please,
point
go
on the
ahead, no.
trade?
Yeah. So just in the middle of all of this data, we pulled up, what the Nifty, the Sensex, and the indices have done from last election to this election, and what are the top stocks that have run up. Because today we're looking at 23,500, close to it, and we're wondering how it's going to move. So you've had 100% change nearly on the Nifty, a 220% change on the mid cap, 204% change on the small cap. So I think today might be, I agree with you there, Samina, today might be a little, you'll have to wait and see how it goes. My sense is still that when you see those numbers on the screen better than what the exit polls showed, if you do, or even in line, because you have to understand the scale of a victory if that comes through.
So that's why, hence, would you initiate a finish your point
finish
about
your point,
the trade,
my point is very simple that we could see 23,800, 24,400 on the Nifty. Not in the opening. This will be post the results.
Okay.
Once the results are set in, on a lighter note, taking heart from the fact that the interview that happened, from the biggest voice in the country, that the programs could go berserk and everything. Why not? You never know. 51,800, 52,500 on the bank Nifty. But would I initiate a long today? Maybe not. If I'm being greedy, maybe a small quantity. But today is the day for placing stop losses, trailing stop losses, taking money off the table as the day progresses. You never know, perhaps, if not today, then tomorrow we could see some sort of profit booking. So there isn't too much of an upside left. And look, we've all been in the market long enough to know you can't consistently buy at the bottom, sell at the top, right? So I'm okay letting go of perhaps even a 500-point kind of a rally on the Nifty from here on, given the kind of move that we've seen yesterday, perhaps, what we'll see today as well.
Makes sense.
The thing, and actually, Kush, can we, are there stocks that you're looking to look at pre-open, or would you wait for the numbers to settle? Just trying to get that out of the way.
I will have stocks for pre-open as well.
Okay.
Yeah, and these are the stocks that, keeping in mind that even if the verdict is a bit here and there, I would still hold them in my portfolio. So I will trade these as well, but I always prefer to trade in stocks that I'm okay to invest in.
We was just making this dissection here. Kush is really talking about the near term, the trade. And if you get bothered with the 100, 150 point move on the Nifty, then do follow Kush's advice, because your stop losses might get triggered if you indeed trade for that kind of a level. What Aditya was trying to say was, if you look at India 5 years out or 10 years out, you don't want to repent not buying today, because 10 years out, the levels will be materially different. Now, that's the point you've got to keep in mind. Aditya, the question to you is, assuming we have a gap up, and assuming that the eventual verdict is what the exit polls are indicating, are there stocks that you don't mind buying today, even if they may fall over the next 2 months, but eventually over a 3-year period, they would be high? Are there some names that you could share with us?
Yeah, definitely. So we've seen, as I was saying, we've seen the large private sector banks undergo a material derating. Yesterday, you were talking about HDFC Bank. HDFC Bank is at a 10-year low valuation. Of course, they have got some centric problems as such, but they will do exceptionally well over the next 5 years as the merger plays out with HDFC Limited. So large private sector banks, not only HDFC Bank, but ICICI Bank, Kotak Bank, Axis Bank, all of them will do materially well. We need to really understand India is where China was in 2000s. We've got some strong banks. 26 banks have got NPAs lower than 1%. So we've got some strong banks who are going to push credit into the system. And once credit flows into the system, all the infrastructure, all the other ancillary activities in the economy will start to push in, and India will start to grow at 6 to 8%. So one pocket where I don't mind buying today as well is the large private sector banks. The other pocket that I am really looking at is the chemical space. Even yesterday, none of the chemical stocks really rallied out. And that seems to be a laggard sector of the market where valuations have corrected over the last 1.5 to 2 years. So that is one of the spaces that we need to really look at. Of course, chemicals is a very heterogeneous space where company by company, you need to look at the chemistry of the companies and then figure out what you need to really do. One of the third sector that I'm really very bullish on, as I was also saying, was the infrastructure space. The government is going to do a massive push on the infrastructure space. I was on a space with Dr. Krishnamurthy Subramaniam, And he said this, that the Prime Minister really understands the value of creating good infrastructure because it has a trickle-down effect on the economy and it generates a lot of employment in the economy.
So what within infra?
Within the infra space, the road builder, the EPC contract manufacturers, the cement makers, all of those look really very interesting. Even a behemoth like L&T, they will do really well over the next 3 to 5 years. They've already done well over the last 3 to 5 years, where the stock was at 1,000 and it's now trading well above 2,500. So that is one of the spaces that you need to look at. And finally, the pharma space. We've seen people like Divi's Labs do extremely well over the last 3 to 4 months, and they will continue to do exceptionally well. So these are the 4-5 spaces that you need to look at. One space that you need to be really very careful is the FMCG space, because the valuations there still are really very expensive and you need to stagger out your investments there. But having said that, as I said, India-based, the theme needs to be India-based and economy-based, where the government is going to spend extremely huge sum of money in the budget.
Aditya, you've very consciously left out sectors that have done exceptionally well in the last couple of months. Defensives weren't mentioned, railways weren't mentioned, and neither was real estate.
Yes.
So if you're betting on policy continuity, if you're betting on a better political stability, better order books, India shining, India growing, you didn't mention power either.
Yeah.
Why was it? Because your play seems valuation play as opposed to policy play, from what I understand.
No. Real estate and power are also two sectors that I'm extremely bullish on because we are in a real estate up cycle. For 8 to 10 years, real estate was not a favored sector per se. But now real estate is slowly and steadily coming about with the cleanup that the government has really done. So real estate and power are also two sectors that I'm looking at. What I'm very, very cautious about are the PSU and the defense space, because they have seen a massive rally. So I will give you an example. We had two PSU stocks, Cochin Shipyard and IRFC. Both of them have rallied about 10x over the last 1.5, 2 years. The market is already discounting the 5-year earnings that these companies will really come about, and a lot of froth is getting developed. So these companies are fantastic companies, but they are expensive, so they might undergo a time correction, after which they'll start to move up. So if somebody's got a position there, I will advise them to stay there. But I will not advise anybody to have new positions because the valuations on them are extremely frothy. Imagine in 2018, 19, 20, nobody wanted to buy a PSU bank or an IRFC at about 18, 19. Now at 150, 160, everybody wants to buy an IRFC.
We bet on strength.
So then it depends on whether you want to take that risk right now. But the person in 2018 and 19 who did is definitely laughing their way to the bank. Thanks. We're going to take a very short break, but before we do a quick count on the numbers, and two sets of numbers we need to look at. First, we look at the implied open and where that has moved. And then, of course, what these tallies are showing you. Implied open now shrunk to 19 up as the numbers go forward. 142 leads for the BJP, 115 for India. Remember that these are just the initial leads coming in. Your EVM counts would have just about begun the first part is postal ballots. But one or two very interesting things I've spotted. BJP seems like it's set to open its account in the state of Kerala in the Thiruvananthapuram seat, where Rajiv Chandrasekhar is up against Shashi Tharoor. He's in the lead right now. Shashi Tharoor has won that seat 3 times. Now, if that goes through, that will be interesting. The first leads from Bengal are also looking interesting. Let's pull up West Bengal as well. And remember, the polls are looking at a superb performance for the BJP in West Bengal. You are seeing them not doing badly at all. And remember, initial, if they're going to go 7 and above. So all of that update coming up. We'll take a very short break and we'll be right back. But before we go into the break, here is what BJP candidate from Mumbai North, Union Minister Piyush Goyal is saying. Remember, it's his first time fighting a Lok Sabha election. Listen in.
लगभग सभी एग्जिट पोल्स ने प्रधानमंत्री मोदी जी की लोकप्रियता देश में किस प्रकार से देश भर में कोने कोने में और शायद वर्षों बाद ये संभावना है कि देश के हर राज्य से भारतीय जनता पार्टी और एनडीए के प्रतिनिधि के रूप में सांसद चुने जाएंगे। दक्षिणी राज्यों से भी इस बार भारतीय जनता पार्टी और एनडीए के हमारे सांसद लोकसभा में जाकर प्रधानमंत्री मोदी जी को और बल देगा।
ये 10 साल में जो हुआ वो तो सिर्फ ट्रेलर है, ट्रेलर।
कांग्रेस पार्टी की सरकार साल का 1 लाख रुपया बैंक अकाउंट में डाल देगी।
जो मर्जी करते हैं, पावर में है, पावर इज टेम्पररी।
सबसे बड़ी कोई देशभक्ति का काम हो सकता है तो 2024 में इनको हटाओ।
Welcome back. It's election counting day, it's result day, and I would say one of the most exciting days in 5 years for the country. The world is watching India's election, and the markets are also poised very, very closely to what is happening, because remember, you've already had a blockbuster day today. Can you continue the momentum? Ajay Srivastav, MD Dimensions Consulting, now joins the conversation. Ajay, great to have you on the show on what is a very, very exciting day. Now, the conversation we've been having in the studio is about whether you would see some money being taken off the table today after yesterday's stupendous run, and how much of it is going to be pegged to what the final number on the screen is. What's your take?
Good morning. I think, first of all, I think yesterday's buying, today's reactions are going to be more emotional, sentimental momentum than going to be fundamental. I think that's the big difference. And for a serious investor, I think it's very important to understand that, yes, the euphoria of elections is good, everything is fine, but at what valuations are you buying? And the reality of the economy at the end of the day. And I think I'll just bring to a little bit of a party pooper to say that just today, Amul announced a 2 rupee increase per litre in price of milk, which just tells us inflation is all pervasive out there in the system. Therefore, the presumption that RBI will reduce rate is not going to happen. So you can buy on euphoria. And I think most stocks today, and I think nobody can argue, are really way out in terms of fundamental earning potential. Maybe a few sectors because of scarcity, because of lack of ownership. Let's take power, for instance. Its lack of ownership has got a great momentum on the summers. Defense, sheer lack of stocks availability at the point of time of liquidity. But by and large, the market in our view is priced to almost perfection at this point of time. So getting a return by buying on a day like this, in fact, there's more euphoria, I think will be very difficult for investors. This is a good time to pair off the losing proposition in your portfolio. And market was mature yesterday. If you noted, almost 40% of stocks went down yesterday, and which tells you a good story that we've got smart investors who are pulling out of losing stories on the back of euphoria. So market is very healthy, but I think you need to be careful that you don't get carried away and buy stocks at valuation which you will then have to sit for a longer time.
So just one follow-up there, Ajay. You're right, not just Amul, Mother Dairy also increased its rates. NHAI has increased the price of tolls in a large part, and you might see tariff increases, etc. So the inflation part is bang on. But just to the point you made of the emotional response, if you are going to see a number on the screen with the election result in line with or maybe better than what the exit polls have talked about, do you think that you would see that that emotional response?
I think you will see some emotional response, definitely, because market was been, at least the FIs have been sitting outside the market hoping that election will be more evenly poised or maybe even negative. So they will have to come in. They have sold in the last 2 months heavily, almost 60,000 crores. So eventually you need to either cover your shorts or to trade up. That's, I think, the point today will become that if there is a great euphoria again follow-up yesterday, will the shorts come back to the system? I think that's a great leveler going to be in the second half. But really the point is that if people are out of the market, would they rush into the market? My answer perhaps is yes. If you're sitting in a good, healthy position, should you add up? Our answer to ourselves and our customers is certainly no. That, whether it's capital goods, whether it's a defense stocks, they have run up a fair bit. Only a couple of sectors that we still feel comfortable to buy, as I said, power is one, and linked to the summer, the great air conditioned rush in this country, which is happening, some of the select stocks there. But by and large, you don't find a need, and you just saw the two-wheeler numbers coming in. So all three companies reported a decline year on year in two-wheeler numbers in the month of. So, so yes, euphoria is good. People are going to parliament, but your fundamentals are linked to what people are going to buy in the economy. They never bought the two-wheelers, so be careful.
Got it. Ajay Srivastava, Neeraj here, good morning. 20
Good morning.
times, 20 half times Nifty. Since you don't have Nifty futures in your portfolio, I'm trying to think, while Ajay Srivastava may be not completely bullish, he's certainly holding on to some of his key bets despite the market-wide valuation view that he has. What are those? Where should people stay invested or maybe even buy today while the Nifty may do what it does?
See, the great story for last year continues to be yesterday is the PSU story. For you, there are a lot of, either you can buy directly or you can buy things like Bharat ETF, where we have a position outstanding quite large. So, I think the PSU story is there for the thing. The second is re-rating of, the nationalized banks. I think this year or this term of the government, something serious is going to happen to these banks at this point of time. They're poised very well in financials, but they need to get out in the private sector. I think you would see some upside coming there as well. So, so surrogate-wise, if you look at it, PSU, either ETFs or PSU stocks or mutual fund, whichever way you want to invest, this is a perfect kind of zone. This is a safest zone to be in because valuations are still lower compared to the rest of the market. The performance is good at this point of time, and you will see some government initiatives. So I think the whole PSU space, the whole power space is one thing we are heavily concentrated, and we keep going with, as I said, capital goods and defense. There's no need to sell because there are no new stocks coming into the market. The new stocks which came didn't have a great traction. So I think you have the same old aircraft, shipyard, etc., which continue, and scarcity element. So our positioning is very simple. A lot of PSU driven, a lot of bank driven. In the last 2 months, as I said, we have vended a lot into banks. Given the capital goods continues at this point of time. Consumer is almost zero. If it was, it is. I am sure it is zero at this point of time. Or we have sold off everything at this point of time. Auto is zero at this point of time. We have just sold off all our two-wheelers stocks. Trucks, yes, we have got stocks at this point of time, and a lot of restructuring stories. I think that's the game is going to be that a lot of companies are going to demerge their businesses and give you a lot of value. So I think there's a separate block of investment portfolio which comprises the restructuring stories, and that's really the end of the way we look at the market.
Very quickly, from all the sectors that you mentioned are across all market caps, from broader markets to large cap names. At this juncture, keeping market cap in mind, would you prefer playing the sectors you mentioned through the large cap space, or would you stick with the broader market names?
I think, that's something, luckily, like power sector, you really have only large cap at the end of the day. If you're taking off the distribution and the generating companies. So you're really in a safe zone with the large cap at this point of time. In the mid cap segment, I think there are few capital goods is where you want to play the mid cap segment at this point of time. And defense, very few mid cap segments at this point of time. So, and the PSU banks, you may classify them one as a large cap, rest are mid cap. So I think you've got a basket sitting there, but primarily if I look at my portfolio and a recommendation is almost 70% large cap at this point of time and 30% is assorted stocks in the story. So another restructuring also, very large caps are going through restructuring at this point of time, and therefore even that model is working well for. So it's a large cap game for 2024 as far as we are concerned.
Okay, Ajay, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. Yep, you too. Have a great day. It promises to be exciting for sure. The implied open has flattened out completely. By the way, viewers, we're going by the most conservative numbers that we can put out. So just bear that in mind. These are realistically the numbers as the EVM counting has also begun. 299 or 199 for the NDA and 133 for the India Alliance as things stand. Gurmeet Chadda, Managing Partner and CIO at Complete Circle, joins us on the show to talk about the fundamentals. On the technicals, Rajat Bose joins in as well. Gentlemen, both of you, thanks for joining in. Gurmeet, are you dressed for the occasion because you're wearing red? Or do you believe that you are anti what the market will show today?
Only I was being shamed in the studio, but Gurmeet, I'm thankful that you've joined in. I was just saying red is the color of energy, so it's absolutely fine.
No, I think it's more with the celebration of democracy rather than the color of Nifty or the markets, to be honest.
Okay, but be that as it may, Gurmeet. So assuming that, I mean, we essentially asking the same question to everybody, right? That if you are indeed, if the verdict eventually is what the exit polls indicated, are you putting cash to work in your PMS schemes, or are you sitting on the sidelines waiting for a correction?
No, Neeraj, there's no point sitting on sidelines. People have been sitting on sidelines, have been on sidelines now a few years. And, these are traits of a bull market. First, you have to take a call whether you are in a bullish phase or not. And, markets are exuberant both sides. We've seen fear also take over when things go the other way. And just to give you a data, Neeraj, yesterday's move was, let's say, about 3.5%. This has only happened 13 times in the last 14, 15 years. Now, if you keep missing out on these 3.5% returns, let's say for a 5-year period or a 6-year period, you lose half of your portfolio returns. So, if you're on the long side, if you're on the fundamental side, you can recalibrate. You can recalibrate in terms of balancing the portfolio, in terms of deciding where there is, euphoria. Can you move from micro caps, small caps to large caps? Can you rebalance a little bit from, let's say, PSU and defense back to maybe financials? So I think the focus has to be rebalancing rather than taking, these extreme calls. Let me wait in cash. Markets are not going to knock you and tell you that, now I'm, reasonably valued, please come in. And I've seen that so many times, and it will happen on both sides, I'm saying. So, we continue to be deployed. We are rotating now. We believe financials are sweetly positioned. We also believe some of the places probably are now at the cyclical lows. They might deserve a bit of a look. So we are rebalancing. We're not taking any timing call as far as our portfolios are concerned.
Right. Rajat, very quickly, we are a little confused. Implied Nifty started with an 80-point gap hour, went all the way to 140, now trades negative. Do we have any trading strategy on the index at 9:15 this morning, or that would be very unwise to do?
Right at the beginning, you don't take a trade. Actually, in the first 15 minutes, or rather, I would say about half an hour or so, professional traders do not jump in. But what I would like to say here is that if you are looking at the exit poll results, that is already discounted yesterday, and the Nifty is at 23,263. Now, suppose if it were to happen that for 400 par becomes a reality, in that case, 24,150 and max to max 24,700. So how much is left? Say about 4% from the current levels. Would you initiate fresh longs? No. I would say that if you have long positions, since you have gained so much yesterday, hold on to it and use a stop loss that you are comfortable. But fresh longs here is not really warranted, and do not jump in to create short positions, because you may get butchered by that. Let the trend decide itself, and once the trend comes in and the Nifty gets into, if it were to go for profit taking, that is likely to happen. Below, say, 22,800, only it will become weak. So considering all this, you have to calibrate your trade the way you want to play as the market unfolds itself along with the election results. And one thing I would say that I would still insist that this month will be pretty volatile. So exposing yourself too much now could actually become counterproductive.
So the Nifty implied open has turned negative. Nothing to do with my red blazer. This is only like me and Gurmeet have said. This is to celebrate the festival of democracy and energy, etc. But Kush, this is also an opportunity, boss, because look at it. People yesterday were looking at this market and saying, "Acha to lag raha hai screen, but hum kya kare? Aaj mauka mil raha hai."
Well, I'm actually a little encouraged by the fact that the implied open's gone negative. If the results are in line with expectations.
What is expectation as per
the 320, the 320 to 350 mark. I will take
320 to 350.
Oh yeah, I will take 320 as well.
365 is the poll of polls outcome.
So if we get 365, the market could see further upside.
NDA.
Absolutely, and this is creating an opportunity to go long at open as well. I mean, assuming that the numbers do come in, but this has created an opportunity at 200 points up and 150 points up on the Nifty on the open. Would you go long? No, perhaps this is an opportunity.
Okay.
Bank Nifty too.
I'm actually more constructive on the Bank Nifty.
You want to tell us if Bank Nifty gets a flat start this morning?
Oh yeah, go long. Go long. You'll have to have your risk management in place. We know that's a high volatility. It could be a high volatility day. But if you get an opportunity, go long on the Bank Nifty.
And you do this with the option trade, so you'd go covered, I'm guessing.
Yeah, well, actually, the premiums will get crushed.
Exactly, correct? Because the wicks will fall.
Yes, and that's why on Friday, if you remember the conversation that we had, it was very difficult to decipher how do we go long, and the best way was to buy the futures and have a protective put. I was glad to see that it panned out very well on Monday. Yeah. I think that'll still be the way to go about it. But if you don't want to take too big a risk, then perhaps an option trade is something you'd want to consider. Yeah.
Gurmeet, yesterday the main reward was for PSUs, right? So we were speaking to Aditya earlier, who was saying that he'll buy quality. And PSUs, of course, have quality. The question is, would you go out and buy into some of the PSUs, be it defense, be it even banks? Yesterday there was some serious delivery-based buying in an SBI, BOB, etc.
So maybe the bulk of the returns probably played out in last 1 year. If you see the market cap was $200 billion at the low, we already 4x of that in a year. So I think it's been a phenomenal move. They have given a record dividend of 1.25 lakh crores. Never seen that kind of dividends from PSUs, along with growth in capital in a long time. I think got to be selective here. I think PSU banks still make sense. I think after a lot of time, I've seen 1% ROA for some of the good banks, including PNB, including Bank of Baroda, including SBI, of course, has been more of a structural turnaround. So I will stick myself to tier 1 PSU banks because in some tier 2 banks, the ROA has been led more by treasury gains and recoveries rather than the core operating metrics. So yeah, I want to keep a watch on that. And with small banks, there could be some accidents here and there. So that can really derail stuff. I'd be a little wary of PSU lenders and non-banks because now they're already trading at 4 or 5 book value. Would probably prefer HDFC, ICICI, Axis on that side in terms of my relative positioning. And we are adding some NBFCs because as bond yields come below 7 and may drop another 10-15 bips, the cost of funds will come down. And I think that's what NBFCs have been really struggling for last year and a half. So some of the marquee names like Poonawalla FinCorp, the Chola, the Bajaj Finance of the world. We also have the Bajaj Housing IPO, which is due. So I would be selectively positioned there. So I'd be happy with what PSUs have done. But I agree that you got to be selective. Defense and railways, I'll be a little careful. There's no harm in probably taking some money off the rim.
All right, your implied open is turned decisively in the red, 22 points down. Now, meanwhile, a ground report, because election day is all about what the buzz is on the field as well. And Vishwanath Nair is joining in from the BJP headquarters in Ahmedabad. Vishwanath, from Mint Street to political reporting. And I'm sure it's quite an exciting morning over there.
Yeah, Tamanna, definitely an exciting morning now. You're seeing some people trickling into the BJP headquarters here at Sri Kamalam, which is the regional head office for Gujarat. People are trickling in now. There's a lot of police on standby at this stage. Still, early trends are still coming in. So, hopefully in the later part of the day, you'll see more people trickling in.
All right, we'll come back to you for more details. Remember, Gujarat is a stronghold of the BJP. They have got 26 of all 26 seats in the 2014 and 2019 elections. We'll wait for the finals to come in. Our screen showing one lead for the India Alliance right now, which would be astonishing if that really converts into a win. But we'll wait and see. Like we explained, that there are rounds of counting which change and the final result depends on what all those rounds finally say. So let me come back to Rajat Bose on what we're seeing on the screen in terms of election results and the markets today. Rajat, good morning. Tamanna here. And, great to speak with you today because this is a day when our viewers really need clarity. And I like what Ajay said right at the start of our conversation. He said today is going to be an emotional response from a lot of investors. Even in these emotional response, what are the kind of stocks that people should look at? And especially if there's an opportunity at dips, you're seeing a negative implied open, you might just get some opportunities right at the start?
I would say that, yes, it could be to a certain extent, there could be an emotional response. In fact, whenever the market hits a new high or a new low, most people in the market, they actually exhibit emotional response. And in this case, to be on the safe side, mostly people would like to buy something. I would say the two stocks that you people have been discussing a little earlier. There is Bank of Baroda and State Bank. These two banks, there is definite technical reason. Both the stocks have actually given a range breakout, and that's a classic range breakout in the sense that there is huge volume and there is a huge upsurge taking away, like say, beyond the resistance level around 284, 285, Bank of Baroda has gone up to 296. What happens in this kind of a scenario, either for State Bank or for Bank of Baroda, even if other stocks were to say see some profit taking, but these stocks very unlikely to come back to the zone again, because with solid volume, this huge breakout has happened. So this indicates that there would be, they have more legs on the upside. So if at all people are looking for a buying opportunity, that would be the case. And otherwise, I would say, if you are that emotional, at least book some profits. And if you book some profits, you would feel great because money is actually really going to come to your bank account. So do that on the side, because see, the reason that I'm harping on booking profits is for the reason is that the Nifty is going up, Bank Nifty is going up, especially the Nifty on the weekly chart is showing an uptrend line for quite some time. But on the weekly chart, the same weekly chart, the 14-week RSI is giving a strong negative divergence. I have seen that they give their effect. So sometime down the road, there would be major volatility in the market. So at least book some profits, but definitely seek opportunities like Bank of Baroda or State Bank.
Kush.
I do not have any positions in any of them.
Wow. Okay. Kush, the stars of Friday and Monday, and even the last time the Nifty made the record high were the Adani names. Sure. Enterprise, Sport, Green, Energy, all had an exceptional run in trade yesterday. Now, if you didn't buy these stocks on Friday and Monday, would you recommend going long on them for the June series?
Well, Samina, very tricky, but just for the day, I would wait and watch on the Adani names. Perhaps tomorrow or a little later is when I could consider. The reason being that, there is a lot of euphoria already priced in, and you are seeing some sort of, an up move in these. While the structure remains bullish, maybe just today, even if everything falls in place as per expectations, then, you'd already see a gap up on these.
Yeah.
And then perhaps the risk-reward ratio may not be in favor. And only from that perspective, I'd say perhaps a cool-off, on some of the names like, ports, enterprises is warranted. When that happens, then of course, these are a buy.
A cool-off for me, if you see a correction of 5 to 7%, would you initiate fresh longs?
Yeah, 5 to 7%. In fact, from a purely technical standpoint, what typically tends to happen is that, when there's a gap created, those gaps tend to get filled. For me, the ideal time would be to enter when the gap is getting filled, or perhaps we're close to those levels. So, for example, on Adani Ports, 1450 is a good level. I know it's a little higher from there. On Adani Enterprises, the gap is at 3450. Yeah, so perhaps somewhere closer to those levels, maybe not precisely at that level, but a little, a bit of a pullback, 5 to 7%, maybe a little lesser, would be a good time to enter. And this is purely from, let's say, a near-term technical trade perspective.
Okay, just want to lay it out, viewers. I think 173 for India Alliance, the leads as they come out right now. Effectively, if that is what happens, right, kind of makes that 400 par out of the window. If this is, and this is change, of course, as Tamanna will keep on telling you, but just by going by the screen right now, 174 for India Alliance means 400 par is out, and maybe that is what is working on the implied open currently, which is down about 50 odd points. So bear that from a market perspective, or 74 points now. What Kush was saying that buying into the bottom might be a good idea if the exit poll verdict was coming out. If that is not, then that trade might stay negated as well, and which is what you need to watch out for. What Rajat said, that might be risky to go ahead and do a pre-open trade per se as well. Aditya, come in on whether it's a good idea to just avoid, even from an investment perspective, considering that it is not, right now it's looking a bit dodgy. Would you bide your time before putting in your trades? 9:15 might not be a good idea.
Absolutely. So we need to first look at what the number really is. If the number is not 400, as Kush was also saying, the market could undergo a little bit of correction.
Let's assume it's not 400, but you say if it's 380, you think the market will correct?
380, no, it will not correct per se. I think the more realistic number from my perspective will be 320 to 340. The market will cheer it because from a longer term perspective, we need policy continuity. Policy continuity is really very important, and that will come only if the NDA is in a proper majority per se.
So Aditya, on that 320, if it's he said 320 to 340. If you're looking at 320, and then the question again starts or begins on what the BJP standalone number is, which was a question which nobody was talking about post the exit polls, right? That had become moot. Now, once again, these are leads. Seats are counted in a staggered fashion. So all of those disclaimers aside, if the BJP number lands up at 303, where they were in 2019, maybe a little below, but above the 272 mark, would that be seen as a negative for the street? Yes or no?
No. So if the BJP has a majority on its own, the market will sense that they have the power to make all the policy decisions and also some big decisions that may be needed for investing more into the economy.
Well, they've crossed the NDA has crossed the 272 mark on our screens right now. Sorry, I interrupted you. Just wanted to mark that. So the NDA is forming the next government. And they've crossed the halfway mark on our screens just 40 seconds before pre-open. We'll wait for that to, of course, bolster and bump up as all the seats are counted. But yes, please continue.
So a major disappointment will be if the BJP on its standalone does not cross 272. That will be a major disappointment, and I feel that could be a trigger for some bit of market correction. But let's wait and watch. And I feel what the street would be watching for is the UP outcome and the Bengal outcome. If the BJP is able to make serious inroads into Bengal, then it will be taken really very positively by the street.
Well, the pre-open rate's about to kick in, and of course they'll be just incidental really, but keep in mind I think all over the place, so no real merit in marking that pre-open number per se, but we'll do that at 280 for the NDA. At least the markets leave a sigh of relief that there is seemingly political country. But as Tamanna said, viewers, these numbers will change. In all probability, yes, the numbers will move up, but these numbers will change. So keep that at the back of your mind.
What is fairly clear now that you are going to have a third term for the NDA government, because you've crossed 272 and the leads are out on 477 out of 543 seats. So that seems pretty much in the bag. Now, the final number of where it lands up remains to be seen, and then, of course, within that, what is the BJP number? But from the distance from leads to votes or leads to results is sometimes a long one. Because remember, at any point, the officials of political parties can come in and hold up that process in the sense, say that we want to make sure it's done well and properly. But in terms of the question mark of whether you're going to see a Modi 3.0, that seems fairly in the bag as of this moment. We'll of course have to wait and see where those numbers solidify.
The only point is at 280 or let's say 300, will the street be too disappointed or no is the question. So Gurmeet, my final question to you really, assuming that the markets give a corrective move today, if they do, I do not know that, but if they do, would you, and assuming that we have a policy continuity, but with a lower majority, if that is the case, I'm building out a hypothesis here, is that an opportunity, depending on what levels, is it an opportunity to invest? And what is that opportunity? Is it 3% lower, 5% lower, 10% lower?
So there is any correction, I think our stance has been buy on dip. So if it comes, it's welcome, because, there are two things you have to in a portfolio. Look at near-term moves for income generation or create generational wealth because you are in a long-term bull cycle. I'm in the latter camp. Even if you see from 2014, look at the way, the solar capacity was ramped up by 25, 30 times. See the number of, electrification done, the money allocated to. So actually, if you see solar panel companies, energy companies going up 4, 5x, you see the spend which has happened over the last 7, 8 years from a policy point of view. If you see railway stocks doing well, see the metro coverage for, of leading cities in India. It's almost 3x now. See the number of Vande Bharat trains if you want to track Titagarh or Jupiter. So I think, from my point of view, I think we are in a capex cycle. We discussed that, the gross capital fixed formation is now 30% of GDP, which is nothing but the fixed assets government, businesses and households are creating. And I think I would look at more policy announcements, what the government wants to do over 5 years on different areas, whether it is water, whether it is energy, whether it is, the infra work. And I will then position myself ourselves for longer cycle. Near-term hiccups, most welcome. I mean, it's a good opportunity as long as the BGP, as Aditya also said, on its own, if it crosses 272, it doesn't matter beyond 1 or 2 days here.
Rajat, while I do take your point that it's sometimes wise to take profits off the table and not be greedy when you're a trader, at least in a situation such as this. But if intraday you get a level of hypothetical again, close to 22,800, 22,900, let's extend the timeline. Let's talk about 27 June expiry. Would you consider initiating fresh longs at that dip? So 3 to 5% correction between today and the next few days becomes a long trade for the month?
Taking a long trade for the month, I'm slightly apprehensive because, as I said, that this has been a huge run. So even for a correction, if you are thinking of taking a long trade and it is the beginning, it's the early part, not even the first week has gone. So there is likely to be some profit taking. See, one thing, if you look at 2019, after here, what they achieved, what at that point of time the market or the Nifty achieved the kind of rise, it has done it on one day. The last time there had been a upswing, say about a couple of weeks, and after that a major correction happened. And I have told you people earlier also that the elections, definitely there is policy continuity, all that will happen because NDA is coming back in whatever manner of that. But what actually would decide is if the Fed funds rate is increased, you will see, if you check history, you will notice that that's a bearish signal. So I'm actually apprehensive of that. That can happen. That if Fed cuts rate, that means that is an admission by the Fed that American economy is going into recession. So our elections, the effect will be over more or less by tomorrow. And after that, you are looking at that on the one side, that is the Fed stance, and the other thing is the union budget. And if you have to discount union budget, my experience tells me that you take at least 10-15 days, and after that, the budget rally builds up. So immediately going for a long trade for the month, at least I'm not comfortable.
Got it. Okay, Gurmeet, Rajat, really appreciate you taking the time out and that sane advice. Thanks so much, both of you, for giving us your thoughts. Now, let's just very quickly, it's 9:05 already. Let's just take a dipstick into what the key numbers at some of the places are. Tamanna.
So on top of the hour, till we have a clear picture, we will be doing this update for you, giving you a sense of what the numbers are looking like. So as of now, here is the all India picture, 283 leads for the NDA. Remember, these are leads, not results yet. Only 486 of 543 leads are available to us. So you're still about 60 odd seats to go. 283. So as per this, the NDA has already crossed the halfway mark. You are looking at a third term for the Modi government if these leads convert to seats and the final results. For the India Alliance at 185 seats. Now, I want to go into some of the states and what the picture is appearing, at least the key states. And we've picked 3 or 4. Let's start with Uttar Pradesh, of course, the big one, with 80 seats and a contribution of 80 seats to the Lok Sabha. Here you are showing the NDA. We're seeing the NDA at 37 leads and the India Alliance at 30 leads. Now, if this converts into the final result, it will be a big boost for the India Alliance because the NDA by itself even with allies, the BJP plus allies have had a dominant control of Uttar Pradesh in the last 2 elections. They had 64 seats in all in 2019. So we'll have to see if we come to that tally. Let me come to Maharashtra. Maharashtra was the joker in the pack in the sense no one was very clear where it would go and which side it would go. There was so much of political excitement over the last 5 years. Here, leads are showing India Alliance in the lead at 25 of the 43 counted so far, and the NDA at 18. I want to then come to some of the other key states where the NDA is expected to make inroads, and let me pull up West Bengal. And this is something that the market will be watching very closely because the question is that after 2 terms of being completely on top in a large part of northern and western India, can the NDA make headway in new areas like the east and the south? So in West Bengal, 21 leads. If those convert to seats, it will be astonishing completely for the NDA to go into a territory with such strength that they haven't in the past. Of course, like we've been saying so far, we'll wait for all of these numbers to settle. I'm just going to pull up Andhra and Odisha, which is the reason is that both also have assembly elections going on, and there have been very different moves over here politically that the NDA has adopted. 15 out of 17 leads going to the NDA right now. Remember, they tied up with Chandrababu Naidu, and whether you could make a southern foray or not for the BJP was the question. If this converts into the final results in Andhra, it will definitely be spectacular for the NDA. Let me just get Odisha. They fought against Naveen Patnaik, the Biju Janata Dal. The question is, would they be wiped out? It's seeming like perhaps they will. 12 leads for the NDA out of 15. Remember, this is a place where they haven't been able to make a mark at all. So if they've now gone into Odisha, increased in West Bengal, and completely had huge strength in Andhra, does it make up for any losses possibly in Uttar Pradesh and Maharashtra? That's what the next few hours are going to show.
We'll keep coming back with more of those updates. Stamina will, of course, decode that on the hour. But we're gearing up for market opening. It's all over the place from the look of it. The Nifty is indicating to a flat to slightly lower start from what we're picking up on. Rahul Arora now joins in with his view on the markets and elections. Rahul, good morning. The outcome, at least from what we are seeing, those early ticks, is not reflecting or resembling the exit poll that we saw yesterday. Nifty, after a 3% up move, is indicating to a flat start. What is your portfolio stand? One thing, a given, is that the NDA is going to come in. But what does that mean if they don't come in with the sort of majority the street would have liked?
Good morning, Samina, and thank you for having me on the show. So the way we've been doing it is over the weekend, since the exit polls came in, we've sort of been advising our clients to take profits off post yesterday's up move. This result seems to be completely in contrast to what the market was expecting. I think if I take you back to 2019, the NDA won about 353 seats, of which the BJP had won about 303. The 50 were allies. And when I sat down for this interview about 10 minutes back, just about 30 leads were left to calculate. And the NDA was showing as about 300. Even if you theoretically assume that they win all 30, that ends up at about 330. And if the allies hold, there you're talking about the BJP being somewhere on 275, 280. I don't think the market is going to take too kindly to that, because the exit polls showed up something completely different. Obviously, the question will be if this lands up being, it will be an NDA-led government. There is no question about that. But if you do have a situation where the BJP ends up at about 270, 280, it does make it a slightly weaker proposition from a policy standpoint, because you'll get that much more reliant on your allies. So I think the street was working with a clear 300, 320 for the BJP, and maybe 50, 60 from the allies. This has turned out to be a bit of an antithesis. So I wouldn't be surprised if the market gives up a fair portion of the gains from yesterday. Now, how do you play it from here? I have no idea, to be very honest, because the only good thing that I can think of in recent memory is that the FMCG companies have given up, very positive commentary on rural recovery, and India is heading into rate cuts. Now, in the backdrop of that, how do you present a budget when the mandate is not as strong as you expected? Remains to be seen. I'm not going to say go in and buy the dip, because it's been such a ferocious rally. You may want it to settle out a little bit towards the end of this week and wait. But I think the first tick from a market standpoint is a bit disappointing. But the only thing, Samina, that's worked for us overnight is that crude is down, and down dramatically. And I think from an India macro story, regardless of who's in power, the fact that crude is hovering around 75, 80, whichever government, whichever form takes shape, that's a huge positive. So a bit disconcerting from a market standpoint on current evidence, but let's see what the final numbers add up.
Rahul, 2.5 minutes left to open, but if you are asking your clients to take money off the table, where is it that you turn constructive again? At what levels?
Well, Neeraj, see, like I said, if from the looks of it, as it stands right now, even if it is a BJP-led government, it's going to be a very slender majority. It's not going to be an absolute majority. You're talking about 280, 290 seats. I don't know, Neeraj. I think maybe this drops down to about 20,000 on the Nifty, 20, 21,000. maybe you can start buying it there. But don't try and catch a falling knife today. I think let's wait for the final numbers. It's possible that these leads are going in the opposite direction. Maybe the NDA numbers actually get bumped up and the initial leads are a bit haywire, because these are leads, these are not actual numbers. So I think if this was to pan out against market expectations, Neeraj, you probably want to go back to IT, FMCG, pharma for the short term. I think you probably want to take a little bit of a backseat, because I think the trade was very simple, Neeraj. If it was an absolute majority NDA government, then you want to play manufacturing, you want to play anything related to chemicals, indigenization, anything that was announced around the PLI schemes, defense exports. I think that was the theme. But if that if it looks like you're going to be dependent on allies to push through reforms, then you're probably in the short term. And Neeraj, let's just go back 3 weeks, right? The point I was making with Samina, the best commentary of this result season has been FMCG. So if you have a good monsoon to top that over and rate cuts and more money in the hands of consumer, I think defenses in the short term may not be a bad place to hide.
All right, Rahul, just about a minute left, and before we go into that pre-open, very quickly, if the number does not come as per what the street wants, would you be looking at booking profits today or just sitting tight?
So, Tamanna, let's get one thing clear. I think even if the BJP manages to get 270, even if they get a one-seat majority, 273, I think it's a remarkable performance by the Prime Minister in a third sitting term. It is a phenomenal achievement. Let's not take
Sorry,
I'm
going to just stop you there. I want to hear that full answer, but going across to Neeraj just for the first opening rates.
Yep. Well, we'll actually take that because it's 40 seconds left for the markets to kickstart trade on what was perceived to be a slam dunk from the incumbent party. For now, it is the NDA which is likely coming back to power. The only question is the markets right now are grappling with the uncertainty of what the overall lead would be, not just for the NDA, but the BJP individually. And I think, therefore, this makes the next 1.5 hours that much more interesting, a bit of toggle between the gainers and the losers. So from a market perspective, not bad. But let's wait and watch what the end result will be. The first rates will come up on your screen. And let's wait and watch if indeed some of the high flyers of yesterday are taking a bit of a pullback or no. Just quick 30 seconds really of the market check, because this will change very dramatically. For now, about 1% lower. Let's see if this changes. Let's just get the heat map up, because I'm sure the mid caps and small caps are also down. Just let's show some of those individual stocks. A deep gash of red actually, because we are now down about 1.5% already. We're talking about giving up some of the gains that we did yesterday, and that's precisely what's happening, because we are now down 2%. The Adani twins leading the losses, then the PSUs following suit, L&T down about 4%. I must warn you that this picture too could change, but for now, the market seems to have made up its mind that it is not in a mood to reward stocks the way it was rewarding it yesterday. Tamanna.
Absolutely. I think till the numbers are clear, that's probably what is going to happen. And even as I go through all of the stocks today and what is not working, simply put, everything that was up yesterday is down today. If I had to give you the short story, so RVNL down 7%, 7.5%, NHPC, Bharat Dynamic, SJVN, that entire pack taking a knock. Among other things, the broader markets as well. If you pull up the small cap and the mid cap indices, seeing quite a bout of weakness. Now, before I give it to Samina for individual stocks, let me just take a second to explain what really is happening in the counting process and what are the numbers that you should look out for. Now, very clearly, there are several rounds of countings that take place. So you would be seeing different numbers on different television screens right now and wondering what really is happening. The final number, the one that matters, is on the Election Commission website. So let me just put it out there. Now, out of the 504 leads that we have on the NDTV network, out of 543, you have leads for NDA at 276. Remember, the leads convert to a final result, win or lose, for every candidate after all rounds are complete. Now, each round is about 14 EVMs taken to a central hall. The votes from those are counted, written on a blackboard, notified, and then the rest, the next round begins. Now, out of every 5 assembly constituencies in a parliamentary constituency, you will have a VVPAT tally as well. That means that slip that fell in when you voted, and I assume all of you voted, will be verified by the officer in 5 random assembly seats. Once all of that process ends, a lead converts into a result. So you will have to wait and see what the actual final number is. Now, in some seats where there is a large population, you will have obviously more EVMs, more rounds, and a longer time for a lead to convert into a final win or a lose. So I would say right now, no matter what you are hoping the result is, hold your horses, because what you are seeing are initial leads. Now, right from the start, right from the get-go, we have been saying that you may see us as more conservative than other screens right now on what the final numbers are. That's fine, because we'd rather get it right. This is a very, very important function that we are performing today, and those are the numbers that we want to say. Now that I'm done with that bit, the fact is that the markets are reacting not very positively, Samina, to what the numbers are on the screen right now.
No, and it's no surprises, right? I mean, this is as expected, really. From this morning, there's been a little bit of nervousness, very contrary to what we saw on the scene yesterday. It was buying the rumors, sell the news, and we talked about this extensively yesterday as well. It is looking a little nervous, and that is a given. We're sub 23,000 on the index. The breadth of the market's also quite weak. Nifty Next 50 is down 2.5%, and the broader markets, for a change, are not doing as badly as the benchmark itself. So the Nifty 50, amongst all the stocks, 49 counters are trading lower. You've only got one sole gainer in terms of trade. Well, if you want me to highlight the losers, that might be a little heartbreaking, so I'll just take you through a few gainers in the broader market universe this morning. Sapphire Foods is up 5.5%, so that one looks okay. Sundaram Finance is up 3%. Marico is up 3%. Macrotech, Blue Star, Colgate, very, very industry agnostic in terms of movers today. HUL, defensives are doing well actually. HUL, Nestle, Sapphire are all from the FMCG pack having a positive start. Coforge is trading flat. On the sell side, we've already highlighted a few for you. The Adani stocks are trading weaker. Banks are leading the way in today's losses. Cement counters are weak. Railways are trading slower. OMCs are also seeing a bit of selling pressure that's emerging. So it's really what everything gained in yesterday's trade is pretty much giving back all those gains as we see it right now. Kush, you want to come in on this sub 23,000? What are you doing? Intraday trade, very quickly.
Well, we'll wait and watch. I mean, not too far, right, for the final count. And the market, although recovered, I mean, it's still deep in the red. Perhaps a wait and watch at the moment. Just see, if we cross 300, perhaps a 310 as well. I think the markets will take that as a reason to cheer. But, would you go long at the moment? I think I'll, perhaps wait and watch. For sure, the numbers are lesser than what was expected. But the fact that, if the ND can come in, or rather the BJP can come in as close as they can to 270, I think that also could be, an opportunity to buy. For now, just wait and watch.
All right, quick word from Rahul. Rahul, I ended up cutting you because we were going into the pre-open trade. So I just wanted to, see the opening rates. So sorry about that, but to complete, you were making a very important point that even if the BJP gets 273, it would be an astonishing achievement. And, I agree with you there because the bar has been set so high, admittedly, by the BJP itself. And maybe that was part of the election strategy, where no one was even talking about, would you, have the constitutional requirement of crossing the halfway mark by yourself. But the point that you were making was an important one. Do continue.
So, Tamanna, they say sometimes a second is a lifetime during an election cycle. Between when we spoke 10 minutes back and now, I was looking at the numbers on your channel, and there are just about 30 seats left to go with the NDA at about 280. I don't know. I really don't know. So much has changed in the last 7-8 minutes, and it's becoming a little tricky. My heart is beating a little higher because, we derive our income from bull markets. And we were hoping for a different result, and I'll be extremely honest about that. I mean, it doesn't, with 30 seats to go, even if you assume the BJP or the NDA gets 50% of that, you're talking about a number of about 295, 300. You're clearly talking about a BJP minority government here. I don't think they're going to make the halfway mark if these numbers are going to happen. That's a bit of a disappointment from the market standpoint. That's not to talk about my political affiliation in any way, but I think so much was being built in terms of this election outcome. And like I said, I think, had the Prime Minister managed to get even a one-seat majority, I think it would be a remarkable statement of his stature and what he has delivered for the country in the last 10 years. But, Tamanna, just keep an eye on the difference in the seats between the NDA and the others combined. Let's not take anything for granted here. It is a democracy, and you don't know how things will eventually function. Allies can stay allies, allies can drift off, but just keep an eye on the difference. And while the Nifty is down, and rightly so right now by about 500, 600 points, like I was telling Neeraj a little earlier, don't be surprised if the NDA lands up around 300, 310, that this drifts down to about 20,000 by the end of the week. Don't try and catch a falling knife. My humble request to all your viewers, these are retail investors who are putting their hard-earned money through SIPs in the market. Do not try and catch a falling knife. India is still in a very good place, regardless of the government that comes in. Like I said, crude is in a very sweet spot. Your rupee is stable. Your external sector is looking good. Rate cuts are on the anvil. Rural recovery is looking up. There are things that are going right for India, and whichever way, shape or form the government takes, this will be a buy on dips market on India. But do not try and catch the bottom on a day like this. Just like you cannot catch the top to sell a stock, this is the best advice I can give in my 25 years of tracking the markets. Do not try and think you're smarter than the market by catching a falling knife. You're down 600, you may think you've caught the bottom. What if you're down 1,000 by the end of the day? Wait it out. It's your hard-earned money.
Wow, that's the kind of advice we need. Wait it out. It's your hard-earned money, and it is not Satta Bazaar, to say the least. Rahul, just one point. Completely take your point. We've been anticipating a price or a time correction for quite some time now. Various reasons have come and gone. Markets have held out. FIs were almost negative on India for the last few months, citing China, citing valuations. If we do go into a correction mode, which may be likely and may be good actually for some who are waiting to sort of get in at a good price, if that, do you think a 15-20% correction from here cannot be ruled out, and that may be a good entry point? I know staggered investing is the right way to do it, but 15-20% from these levels potentially could be a given?
So that's the point I made earlier, right, Samina? Because when we started this morning, the Nifty was anywhere at about 23.5. And like I was telling Neeraj earlier, I wouldn't be surprised if it dropped down to 20. That's about a 15% correction. See, Samina, let's not forget the fact that there are some very important state elections coming up. The state that you and I sit in currently, Maharashtra, goes to elections in about 4 to 5 months. This is one of the states on current evidence that's hurt the BJP in this election. West Bengal goes up for elections, I think, in the next year or two. So there are a lot of important state elections in the next 6 months to 2 years. In that backdrop, what sort of a budget does the Prime Minister choose to present when he does so next month or early August? I think that's going to be very critical. The only concern I have is the one thing the Prime Minister has shied away from over the last 10 years is being populist. He has spoken a lot about Atmanirbharta, cutting down subsidies, making people more self-reliant. Will this force him, will this force his hand to become populist, which then puts into doubt your fiscal deficit numbers? That is the only concern I have, because you have such important state elections coming up. No one will talk to you about this right now because it's going to be a day headlined by national elections. But keep this at the back of your mind, because this is going to be the single most important determining factor on what the union budget is going to be like. You are going to want to rebuild in the states where you lost ground. And let's not forget, Samina, one of the biggest states, and just, I'm looking at the graphics on your channel, one of the biggest states that's hurt the BJP is Uttar Pradesh. This is remarkable. In the Hindi heartland, you had so much going for you, and you've lost so much ground in Uttar Pradesh, where you are actually coming in second, and this after opening the temple. So, I mean, it just goes to show you how much will probably have to done on the ground to recoup sentiment. I mean, I was talking to V-Mart Retail, and, you should talk to Lalitji of V-Mart Retail, and he'll give you a sense of what's happening in UP Bihar, because 70% of their revenues come from these two states. There was a fair amount of rural distress post-COVID. It was just about starting to look up. And in that backdrop, if you have this sort of a verdict. So keep in mind, I think the next critical thing will be the budget. I just hope there is, they keep that tilt on fiscal deficit and they don't slip. But, if I was in his place, I'd be tempted to try the populist hand.
Rahul, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time this morning.
Pleasure.
That's the view from Rahul Arora of Nirmal Bang. Let's get in a global view Mark Matthews, Head of Research Asia at Julius Baer, joins in right now with his thoughts. Mark, great having you. Thanks for taking the time out and being with us. What's your sense, Mark? We're still in the leads phase, so the results are not clear as yet. As of now, the leads that we have point to a 282 for the NDA, not for the BJP. A bit of an antithesis from what the exit polls were suggesting. What's your view on India, therefore, as things stand?
Well, doesn't that still give them majority, 282? You'll have to tell me.
Yes, at 282, the NDA gets the majority,
yeah.
yes.
So I'm not surprised. I'm not panicking or anything like that. I think that's clearly lower than what some pollsters had estimated, but enough to give the majority and a continuation of the pro-market policies that we've had for the last two administrations. Don't know if I have much to add apart from that. I don't think it's bad.
So, Mark, here's the question. A lot of local people, of course, look at the quantum of leads that were built and whether that has come out and try and form their view accordingly. For somebody who's looking at it from a global perspective, if the number is not as strong as the last time, but it still gives the government a chance to return to power, for you, the continuation of the government, even with a lower majority, is that present continuous, or would you believe that that's a bit of a sign of nervousness for the markets?
No, I think it's a sign of continuity. I think, possibly it shows that the government has lost some edge with voters who voted the last time, but not enough to make the reforms go away. And there was another election yesterday on the opposite side of the world, in Mexico, actually, where there was also a populist government that was elected, re-elected actually, but they're leftists, and so the market there in Mexico went down. So I think it's an interesting contrast because I think that investors clearly like pro-market government like the one you have in India, and they don't like left-wing governments like the one they have in Mexico. And I think share prices will continue to reflect that. Beyond government, I'd simply say that it's clear, looking at the performance of India relative to the rest of the emerging markets, and not only over the last 14 years, but you could go back 20, 30 years, that India has a performance that almost no other emerging markets have. And I attribute that really to the ability of Indian companies to return value to shareholders. And unfortunately, the emerging market complex, although its economic growth is very strong, they don't seem to be able to translate that into the bottom line. And that explains the massive underperformance of the emerging market asset class over developed markets over the last 10, 15 years. But what I want to say is that India is the exception to that. And I think, partially is due to the reforms of the last few years. But beyond that, it's also because, for some reason, Indian companies do create value for shareholders, and that's fairly unique in the emerging space.
Very quick question, Mark. So I'm assuming that your stance doesn't change on India, even though the ruling party doesn't come in with a landslide victory. Would you at this stage, keeping all the other macros in mind, politics in India, globally, of course, competition, a good growth, India's inclusion in JPM, would you, what is your stance on India in terms of new money coming in? Would you still be overweight India? And if yes, what are the 2 to 3 themes that you would still buy into in the country?
Well, the short answer is yes. And I noticed on Friday last week that the New York Times published an article titled "Wall Street Lands on India Looking for Profits It Can't Find in China." If you read the article, which is online, there's hardly any reference to this election, actually. It's talking about the economy and companies and, the kind of things you were just mentioning. And so if the New York Times is emblematic of sort of foreign view. I think the view on India is basically that this is a big, open democratic country with a big economy, a young population that has a lot of room for growth in front of it and a history of returning value to shareholders. That story is absolutely unchanged. And so I think that the themes that we liked, yesterday are the themes we still like today. Those would include things like the real estate sector, where the middle class is growing and there's going to be more demand for building materials and furniture and whatnot. The power sector, where demand is clearly in excess of supply. And all sorts of things. The banks, it goes without saying, are the heart of any economy. Consumer.
Mark, so Tamanna here, and I know we asked you about the numbers on the screen, which are still firming up. So we still have leads. They have to convert into final results. As of now, our numbers are showing 291 for the NDA, but that means that not necessarily yet for the BJP. We have some streets to go. Now, why am I asking you all of this? The big factor for the domestic markets is whether BJP by itself, not the NDA alliance, the BJP by itself forms or crosses a simple majority of 272. I'm trying to understand from the FII view, from the global view, how important is that you have stability, policy continuity with Prime Minister Modi's party in complete control. Does all of that matter from a global view?
I think the part that people were looking forward to was the idea that with that party majority, there would be land, labor, and judiciary reform. And so if that doesn't end up happening, how much of that is in the price, I can't say. But to your earlier participants' comment, if there is a pullback, it's a buying opportunity. I don't see why India would turn into a bear market. I simply don't see the conditions for that at all.
Great chatting with you. We'll hopefully come back and have a more detailed conversation next week when the tide settles. In the meantime, a quick check on how the markets are holding up or holding down. The VIX has also jumped significantly, actually. You would imagine that as we get closer into today, you would see a little bit of cooling off on the VIX. But because the outcome is looking so different from what the markets had factored in yesterday, the VIX is up about 20%, 25.3. This is the highest it's been in this season, to say the least. The Nifty as well, if we can pull that one up, see what's going on. The breadth is quite weak. The Nifty itself is down nearly 3%, so 680 points. We're almost given up pretty much everything, barring a few points here and there in terms of what we gained yesterday. Intraday high yesterday was 23,338. Today's intraday low was closer to 22,500, attempting a little bit of a recovery, but of course it is going to be very, very volatile with a very clear negative bias from what we see. Bank Nifty is weak, Adani stocks are selling off, PSU is leading the way down in today's trade. But we have Mihika, who's at the dealing room where the other place, apart from a newsroom where the action is. She's in conversation with MK's global head, Nirav Seth, who's joining us live from the dealing room. Take it away, Mihika.
Yes, good morning, Samina. So yes, I am with Mr. Nirav Seth, the CEO of Institutional Equities at MK Global Financial Services. Mr. Seth, my first question to you is, what's the sentiment among your clients right now?
Well, you can look at my team, this is hustling and bustling, and you can see they are quite quiet. So this is obviously, from what we were expecting, this seems to be a disappointment. And if BJP runs short of an absolute majority, even though NDA comes with a majority, market will reassess the entire trajectory of the policy and how we want to look at budget and the introspection in terms of what the government wants to do, because this is a shocker, if nothing else, probably coming from the worst possible scenario. From what we hear right now, that even Mr. PM Modi seems to be trailing in Varanasi. So obviously, this is a big disconnect.
Yes. And what kind of sectors are your clients interested in buying in right now?
Well, there's a big sea change in terms of what was there yesterday and what is there right now, right? So the whole idea was that you're going to reset the infrastructure level, you want to reset the investment to GDP ratio. If you look at the last 3 years, probably the first time since India's independence that your capital expenditure was higher than revenue expenditure. The question is that you've not been able to sell this politically to the to your constituents, right? So. Yeah, the whole thing you will to reassess in terms of, what kind of cabinet you are forming, what kind of policy direction you are taking. But those things are different. First, I would believe that given the kind of run-up that you've seen in the markets, there could be a sizable sell-off if BJP doesn't get an absolute majority on its own.
And in terms of sectors, are there any sectors that do stand out?
Well, right now, so, in one of the interviews I said yesterday that, it is right now it is about alpha. It's about beta, sorry, not about alpha. The question is that whether you want to buy Indian equity assets or not, right? Today, after the dislocation, assuming that, NDA doesn't come in absolute majority, we need to reassess that at least till that time that valuations come back to a mean reversion.
And, when you talk about the differential in valuations, what is the differentiation in valuations between the large and the small caps?
Well, I'm not talking so much about the large and the small caps. The small caps are growing faster and therefore they are priced at a premium. But all this is contingent upon the fact that you can see 5 years out, 10 years out, your valuations eventually are a function of longevity of the earnings. Like I said, eventually if you look at the history long enough, these things don't necessarily matter, right? But the fact of the matter is that there was so much built up in anticipation for all of us, right? Because we believe that, India has gone to a stage where economics has started driving politics. And I don't think that, you've ever seen the PM not ever getting a majority. Right, from that time he was chief minister in Gujarat. So assuming, again, I'm coming back to the same question, that if you assume that BJP doesn't come back on its own in absolute majority, a lot of questions will be raised.
And, so far we've seen FIIs selling, but given we have government stability and the FIIs do start coming in, do you expect more large funds towards the large caps?
Yeah, that was our expectations. So assuming that, you don't have any change in political establishment and the story continues, then I was forcing a very, very strong surge in FI inflows.
Okay. And given a scenario that we do see government continuity, what are your top sectors that you would like to stay invested to or buy into right now?
Well, it now depends upon whether you're coming back to power and are you coming back to power with a reasonable majority, right? So I'm saying anything above 300 is only of academic interest. I don't care about it. But you need BJP with 270, you need NDA at about 300. Then I think the story continues because they will be able to figure out, right? So I don't think that the basic DNA of BJP will change in terms of how they, how they want to reset the economic growth rate of the country forward. What will change probably is the way they start communicating to people at large, right? Because they have to sell the agenda because they eventually want to get voted back to power.
Yes, okay. Thank you so much, Mr. Seth, for joining us.
Thank you. Pleasure.
That's the view from the MK Global Dealing Room. Nirav Sheth giving his thoughts. What we need to do, by the way, as we, just before we take that break, and I think this is important to lay out, that while the leads are coming in as they are, and it's NDA 293 now, those numbers, which were static for a really long time, have started inching up a bit. The Election Commission website, Tamanna, is a different piece. Just before we take that break, Tamanna, take a minute and just tell us the importance of that.
So on every election, Neeraj, and I know everyone gives leads, but at the end of the day, I always look at the Election Commission website because that's what is final. They have 392 out of 543 leads, so much slower than what any TV screen is showing you. But remember, that's the asli one. Now, as per that, the BJP is leading on 187 out of those 392. That means you're close to 50% seats of everything which has been showing leads so far is with the BJP. The INC is looking like they're going to cross their 2019 number, which was fairly dismal. It was in the 50s. And of course, we will have to wait and see because like we've been explaining that you have rounds of counting. As of now, what is seeming fairly clear is that the election result is tighter than what was expected. If it was not, you would have probably seen a very different screen by 10 o'clock. It is a closer fight. Doesn't mean we know what the outcome is so far.
God. On that point, viewers, we need to slip into a very quick break. More action on the markets and more guests on the other side. Stay tuned.
ट्रेलर है ट्रेलर।
कांग्रेस पार्टी की सरकार साल का 1 लाख रुपया बैंक अकाउंट में डाल देगी।
जो मर्जी करते हैं पावर में है, पावर इज टेम्पररी।
सबसे बड़ी कोई देशभक्ति का काम हो सकता है कि 2024 में इनको हटाओ।
All right, back with markets, and we'll stick with markets. Volatility, India VIX has inched up a little bit. Markets are a bit tense, yes, because look at that volatility index. It's, you know, the VIX has gone back to levels that it was on Friday. Markets have gone back to the levels that we were there on Friday. Monday almost seems like a distant memory for now. Let's see if that gets recouped, because remember, as we've been saying, as per the Election Commission website, the numbers, they're going a bit slow. They're very different than what the leads as of now being shown, even on our website, or even on our screen, by the way. As we speak,
sorry,
by the 297.
I wouldn't say they were very different, Neeraj. Let me just come in there. I wouldn't say they're very different in the sense they're, of course,
297 to 194, so slower, yeah.
Yeah, they're slower, but in terms of directionally, does it mean that what we're showing on our screens is
Not
incorrect?
at all.
Not at all.
Not at all.
It's showing a closer fight than was expected.
Exactly, yep. Okay, let's get in one more view from somebody who's been very constructive in India. Trin Nugent, Senior Economist of Emerging Asia at Natixis, joins us. Trin, great having you. Thanks for taking the time out. I've seen your pinned tweet, Trin, wherein you spoke about what a Modi 3.0 could mean for India from a global FII perspective. Seems that that is going to happen, albeit with a lower majority, maybe, as things stand right now. Does that make you less constructive, or you stay as constructive as you have been on India?
No, absolutely not at all. I think that Modi set himself a pretty high bar. I think if he reaches even in 2019 level, it's still quite significant, right? So the disappointment is that everyone had a very strong bar to what the outcome would be. I think what it does show is that there's still work to be done. He's made a lot of progress in cleaning up the balance sheets, but the next step, the Modi 3.0, is really about broadening now that growth, right? He's done a great job of cleaning up bank sector balance sheets, the fiscal balance sheets in terms of the quality of the spending to do more capex on infrastructure, on diversifying energy supply, such as expansion of renewable as a share of total, and more importantly, reducing the negative aspects of subsidies and adding more of what's needed. Now, on the current account, it's also quite greatly improved, particularly because goods deficit declined quite substantially. But that decline of goods deficit also mirrors a weakness, right? It mirrors a weakness of the fact that corporate sector in India, up until very recently, have deleveraged, which means the investment cycle were on the downturn, which has an impact on jobs, right? Service sector in India continues to outperform and continue to be a key driver of growth, but the manufacturer continues to be quite weak. So we think that in the next stage, we need to include everyone on board. Much of the job growth has been on the high skilled IT, businesses, services, and so on and so forth. The next, and even in manufacturing, it's really the ICT export that's excelling, right? Whereas we need the labor intensive, the job growth, the broadening out from fiscal investment, which has helped sectors like energy and infra, to other sectors, to other firms. And I think that is what the polls and the results are showing. It shows that Modi has done a good job and likely to be able to form the government, but he still needs to continue to do his work. And there is a lot more to be done in India, particularly regarding the manufacturing sector, particularly regarding the broadening out of growth, and especially including manufacturing, not just high tech, but labor intensive, because we have a very large share of the population still employed in the agriculture sector. And for us, we need to be able to move these farmers into factories, providing them with higher productivity jobs to really include them in this growth story.
Absolutely. Trin, great to speak with you. Tamanna here. And even as we wait to see what the final numbers are looking like, I was keen to know your view on what you'd like to see from the next government in the next 5 years? We've been talking about the China Plus factor and India's lead in manufacturing. We're moving forward on our PLI schemes on semiconductor. We hope to be at the forefront of all things AI. What are the key things that you are looking out for?
Right, India is actually, if you look at India penetration into large tech companies, quite good. As I mentioned, it's done a good job at absorbing and formalizing the high skill sector in India, right? That's lead to an increase of formalization of jobs, but it's still 10% of total roughly. So what I am looking for is to really move this further, right? You know, the sectors have done well, have been infrastructure, energy. We need to broaden this further. We need to broaden the easing of liquidity conditions, right? So what I'm looking for is reforms that are necessary to do so. You know, labor market reforms, for example, progress has been made in not raising the number of people that need government approval to be fired from 100 to 300. But we need to unshackle this further, because if you want to attract labor-intensive manufacturing and large-scale employment, we need to remove a lot of these hurdles. And it's not just about building physical infrastructure. We also need to work on the soft infrastructure. And this is where I think the Modi 3.0 would need to be headed, so that India is firing on all cylinders, not just the service sector and the pharma and the ICT sector.
Well, just a quick question on what you're making of the recent developments, which are beyond politics, right? And I want a view from you on Indian paper, because that's, again, an important talking point for a global investor or anybody looking at India from the outside. We had GDP growth that came in much higher than the street was expecting locally and globally. Apart from that, you've had an S&P upgrade in terms of the outlook. Sure, we've not got a rating upgrade yet, but that's only a matter of time. JPM inclusion, we've talked about this extensively for the last couple of months. Just goes to show you how excited we're about all this. Keeping all that in mind, can you draw a parallel for us between economy and real India, real earnings, India Inc.? How does that stack up? And also, do you have an outlook on Indian paper? Does that still look attractive to you at this stage?
Well, I think for India sovereign, the govies, I think the move is upward, right? In terms of, as you mentioned, the sovereign upgrade. They've done significant reforms. I think fiscal consolidation would need to be further. So one of the things that I think the Modi government has done well is really improving the quality of its fiscal, right? Expenditure has gotten better, and that includes more capex and what's really needed versus just a lot of subsidies. Now, revenue is also increased, but it's still large. So I think what we need to do is first a consolidation of this, right? So that's a point. The second is that the foreign participation, not just through the passive flows, as long as India continues to make improvements on its fiscal, which we think in the future we need to include more direct taxation. And if India wants to grow manufacturing, this import and excise part of the tax revenue equation will need to decline over the longer term, then I think upgrades are very likely. And when we talk about broadening, I think a key metric you should consider is India GDP per capita. What a lot of people focus on is PPP, which is purchasing power parity. But if you look at the absolute number and you compare it to countries with benchmarks such as Indonesia, Vietnam, and so on and so forth, Vietnam actually has a lower rating. India GDP per capita is still only 2,500, despite rising by 64% over the past decade, which means it has improved, but there's still a lot of room for broadening of that. So in other words, I think that my outlook is quite constructive. I think it will continue to have positives in terms of rating upgrades. The upgrades have been only on the outlook, but once the fiscal consolidation is sustained in a few years, it's very likely that India will be upgraded. So there's a lot of room for India to grow because it's at the lowest for IG, and I think there's a lot of appetite for India bonds just because it has the story going for it, right? It has a fiscal consolidation story, reforms, moreover, very strong growth. So the sustainability of fiscal is not a major concern for investors. In terms of Indian earnings, of course, India has very similar to nominal GDP. Earnings have increased substantially, right? So the earnings themselves have follow nominal GDP, and I think nominal GDP is also quite important. That's the reason why when you compare Indian companies with Chinese companies, right, real GDP in China may be solid, but because of deflation, earnings are very weak, right? So as a result, I think India, if it continues to grow on a real and nominal basis, Indian companies will be supported. And they will be supported further once you have this broadening out of the investment cycle. So not just, the Indian stock market is actually predominated by large caps and so on and so forth, right? So we need smaller firms to be able to access capital, to get liquidity, to then be able to invest. And which is where I think the next excitement will come from, is that we're going to have this broadening out the investment cycle beyond the conglomerates.
Well, let's see how it shapes up. But Trin, really appreciate you joining us on such an important day with your view. Thanks for taking the time out. That's the view from Natixis. They've been constructive on India and believes that with this current thing as well, could be constructive. Now, Aditya, come in here. How are you thinking about it from a portfolio perspective? Are you sitting on the sidelines? Does this surprise you, or do you believe this dip is a dip that you might want to take advantage of?
I'm really happy. The numbers are not as strong as expected, but this will cap the froth that was there in the market. And now this will open up opportunities not only in the broader market, but also in the PSU space as well. So you need to be very, very careful, as I said, what you want to invest in. The market could stand here and maybe correct as well 5 to 10%, because the majority is not as thumping as the market was really expecting. Of course, the market will still expect Modi to form the government per se, but I'm happy that this will open up opportunities for investors in high quality companies.
But you wouldn't buy today, right? I mean, you're saying when you're looking to buy, you're looking to buy with a bit of a lag.
Of course, over a period of next 1 or 2 months, as picture becomes more and more clearer, now the upside won't be as dramatic as we had expected after the exit polls. We could also see a short-term correction. In fact, this could be a trigger for a short-term correction in the market, after which we could resume the bull market. So we are still positive, we are still optimistic, and this could open up the opportunity for all those who are sitting on the sidelines with cash.
So you are at 301 right now as per our screen, and do remember, viewers, that channels which were showing like they were speeding ahead have now come to the same numbers. So slow and steady wins the race. You have to be right on this. So 301 is showing a clear third term for the NDA. What the street will be watching is what the BJP number is, and that you're going to have to wait for a bit. But the fact that you are seeing a third term right now, it's safe enough to say that you are seeing a third term right now. And I just want to come back to what Rahul Arora was saying, that this is politics at the end of the day. So, if you need enough numbers to cross the halfway mark or a comfortable mark, and there is a 36 number of others right now, so a lot of machinations is not new to Indian politics. But having said that, Kush, I want to come to you. Aditya says he will wait 1 or 2 months to buy. My question is why? You are seeing a third term, you are seeing the markets which have, like Neeraj was saying, priced in the worst and were nervous, now coming to the conclusion that things might not be that bad. Isn't this a good ground to start, taking positions?
So, Tamara, let me answer this in 2 ways. Of course, I'm not a political expert here. I'm looking at this as a market participant who has an eye on politics at the moment. What we saw initially was perhaps a more, someone in the morning put it, a more emotional reaction to the initial numbers.
22,800 on the index.
Absolutely. And at the end of the day, if you would have said that, the NDA is still coming to par with, let's say, 300, 310, and I'm saying, let's say 2 months ago, right now what we saw was a lot of hype around, the 350, 360 number. But a few months ago, if someone said that, the NDA is still coming to par, there is going to be a third term, would you have accepted it? I think I would have. So from that perspective also, this is stability, this is, sanity prevailing now. Now let me put on the technical hat. Initially we spoke of, the gap filling process. If you see, whatever gap was created yesterday was filled and then some more. But what is also encouraging is the rebound that you're seeing from those levels. Market will very soon come to terms, I think it's already coming to terms with the fact that, the NDA is still going to form the government. The policy continuity is going to be there. From a levels perspective, I think, we'd already touched, key support zones on the Nifty, on the Bank Nifty. They would not have mattered if the results were extremely off the mark. But I think this is still, I'd say, fairly in line. So from here on, it may not be a bad idea to perhaps take a small long trade on the Nifty, perhaps even on Bank Nifty, volatility could still persist. You should have a stop loss in place, but perhaps a long trade from here on is not such a bad deal.
Extremely quickly. We are almost at 22,900 now, so it's at the day's high point, and that's a very sharp recovery. So if anybody who got in at that intraday low on opening would probably be looking to cutting their gains over here. So there you go. That's the chart. It's not, that's the wicks, but the Nifty, of course, at the day's high point. If we can pull that up, it should be useful for our viewers to understand where things stand. The breadth also, Zimran, has improved. Bank Nifty also is trading around 49,400, so that's not too bad. Sure, we were having our eyes on 52,000 till yesterday afternoon, but we will not complain with what we are seeing. The breadth's improved, and I think that's what we should take heart in. When Neeraj, of course, highlighted the market opening in 9:15, you had one stock that was in the green. If you look at that now, that has changed a little bit. Of course, it's only defensives that are doing well in FMCG counters, but IT and FMCG are not doing too badly in trade. Just to also look at a few other big losers, you had Adani Group stocks that had sold off quite sharply, but all those counters are 3 to 4% recovered from the day's low. Very quickly, Kush, before I go into break, Adani Enterprise, a buy at current market price for intraday, 3,400 on the stock.
Yes, and the logic is the same as we discussed for the Nifty and the NDA forming a government.
Okay, so a constructive long trade on the Nifty, Adani Enterprise. These are trades that Kush is, of course, giving out, looking at the charts for an intraday move. We'll take a break. Stay tuned, but we've got a lot on the other side, so stay with us.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve.
All right, it's turning into an exciting election morning. And exciting because the screen is closer than what was expected. Is there any big surprise in terms of the actual final outcome? No, not really. We now have 543 of 543 leads on the NDTV network. You're showing a clear third term for the NDA at 303. That's for the NDA. Now, for the street, the reason you're seeing so much red on the screen is that in 2019, 303 was a figure only for the BJP. So a 303 for the NDA means that constitutionally, the NDA, that's the National Democratic Alliance, can form the next government, will form the next government, but the BJP by itself is very likely under the 272 mark. Having said that, we will wait for those numbers to settle. India is at 205, performing better than what most exit polls had predicted. For pollsters, this is going to be a tough morning, apart from those who are looking at a one-way sweep and thinking that the screen will look exactly like what the polls were saying. Let's go and look at what's happening in the key states, because that's where the story is. And I have to start with Uttar Pradesh. Why Uttar Pradesh? It's the most populous state in India, has 80 seats in the parliament, and in NDA leading on 40 here, which is great. But look at the India number, and this is the Samajwadi Party here, largely, which is leading that charge at 38. Now, for context, in 2014 and 2019, the NDA had a lion's share, an outsized share of the 80 seats in Uttar Pradesh. It's a politically very sensitive state, and the road to Delhi, it's said, often leads through Uttar Pradesh, and that's perhaps one chart which is making the markets uncomfortable today. I'm going to come to Maharashtra. Maharashtra was always a tough state to predict, simply because there have been so many permutations and combinations of leaders. Here, the NDA is leading at 27, 28 in Maharashtra, augurs well for them, but the India alliance is not doing too badly at 18 seats. Remember, there are split versions of the Shiv Sena and the NCP on both sides of those two political formations. So Maharashtra is going to be an interesting battle to watch as well while the numbers settle. Now let me come to the key states where it was expected that the NDA would make a lot of progress in terms of their seat share and vote share. West Bengal is the big one over there, because if it was expected that after reaching a peak in the Hindi heartland, you would see some slide for the BJP and the NDA, then where do they make up? West Bengal is one of them. Most polls predicted the NDA. Some polls predicted the NDA to be ahead of the India alliance. That doesn't seem to be happening. At 19, though, it is a jump from last time for the NDA as well. So that will be seen as a positive. 24 seats to the India alliance. Actually, that's Trinamool Congress, because in West Bengal, they chose to fight outside of the India alliance. So it's a Trinamool Congress win over there. And it's, you know, they've said that they will, if they have an opportunity, support the India alliance from outside, but they've kept their distance. So that's an important point. Odisha and Andhra Pradesh are the other two very, very interesting battles today to watch. Odisha has been a big gain for the NDA, 16 seats up. And that's bad news actually for Naveen Patnaik and the Biju Janata Dal. So this whole sort of process that we've seen, or trend that we've seen, of the BJP eating into vote shares of regional satraps continues with Odisha as well. Andhra Pradesh is come back for Chandrababu Naidu after being in the political wilderness, at least for the last 5 years. Those NDA seats is mostly with Chandrababu Naidu, the BJP also gaining over there. But this is a Chandrababu Naidu story, and he is now part of the NDA. I want to quickly look at Gujarat. I want to look at Rajasthan, and I want to look at Delhi if we can. So some of those Hindi heartland states and Gujarat. Now Gujarat, if this is the final result, will be shocking, because 26 of 26 has been the NDA score in the last two general elections in Gujarat. 5 seats. If it's going to the India alliance, then we'll have to really see which seats those are and where things have gone wrong for the BJP in Gujarat. Let me come to Rajasthan. They won the state elections comprehensively. It's not looking like such an easy win this time round in Rajasthan. 14 seats for the NDA, India alliance at 10, as far as the leads we have at this point are concerned. Let me see if we can get Delhi, and I'm not sure if we have a Mumbai cut or not, but Delhi was another very interesting fight, because remember, it was all about Kejriwal being in jail and unfair, etc., etc. But really, Delhi seems to be very clearly in favor of the NDA, with 1 seat perhaps going to the India alliance. So far an interesting picture which is turning up. It for now looks like the BJP has made gains where to compensate its losses in strongholds from other areas. And we will, of course, as the rounds of voting continue or counting continue, have to see where that number is finally falling.
By the way, the recovery in the markets, so keep that in mind as well, because we have gained quite significantly from the lows of the day. And Tamanna was highlighting TDP. Look at Heritage Foods. Look at some of those politically linked stocks, and you will see some upticks in some of those as well. It's just about 2% lower currently, 10% or 11% higher for Heritage Foods as we speak. Let's get in a set of special guests. A. Balasubramaniam, MD and CEO of Aditya Birla Sun Life, and Pratik Agarwal, ED of Motilal Oswal AMC, join us right now on the show. Gentlemen, thanks so much for joining in. Pala, what's your sense? Right now, the market's a bit nervous. We don't have the numbers out as yet in totality. But if it is political and policy continuity with a lower majority, is that near-term worrying for the markets or not quite?
I think more than near-term worrying, I think we'll have to look at today's fall in conjunction with yesterday's rise. We saw a significant pullback in the market yesterday on the back of short covering, as well as on the exit poll outcome that was being shown. And today, of course, there is the disconnect between the exit poll outcome versus the actual numbers. Therefore, today's market reaction should be looked at from that angle. But given the fact that the results is what is showing up, I think as we move forward, one, of course, market will start looking at after the government formation, policy continuity, there will not be any doubt. In terms of expectation of growth for the overall economy and push that they are giving, I don't think will be any doubt, and that probably will be assumed it will continue for driving the growth momentum for the country. What could probably come in the way is actually the way there has been opinion being expressed that the Indian markets have done exceedingly well, and what the kind of valuations one has to pay in certain segment of the market. And those are the debate discussions will come. Therefore, the rate of momentum in the market probably could probably take a back seat, but that doesn't mean it's taking away the buoyancy which is being built for India as a story as we move forward. I think that's not going to something that would get derailed. Probably it's a good reason for the market also consolidate and before it takes off on the back of earnings as well as back of the growth coming back to the systems big time.
Okay. Prateek, what's your stance for somebody who's listening in right now and trying to understand what should an investor do? What would your advice be while we are in this period of uncertainty with regards to the seats? Okay, I don't think Prateek, you'll have to unmute yourself. I think you're on mute.
No, so depends if the investor is long-term or otherwise. I think the long-term stories continue to remain the same. Many of the spaces which were doing well in the markets were in line with Indian aspirations and global aspirations. Those stay. If the dispensations don't change, mostly the policy direction would also remain the same. So, a dip in the market in a strongly growing economy like India almost always is but yes, like Bala was saying, one has to look at it in conjunction with yesterday. We got a large bump up yesterday. We got a dip today. We are getting a dip today. Maybe it is best to let the volatility settle and then come in. So unlike managers who compete with the index and with each other for performance, I think investors need not compete. They can sit out, let the dust settle and come in, when the thoughts can be much more rational.
In that case, Prateek, you're sitting out of the markets right now. Would you wait for a little bit of a steeper correction? I mean, of course, we don't have a correction at this stage. Before you go out and accumulate, what is the strategy at this stage?
No, typically we stay fully invested, more or less, and that is the case now as well. When markets are very strong, we thank God and sell a bit. When markets are weak, as they are today, if we have cash on the sideline, we try and nibble a bit.
Got it. Okay, I think I've lost the line there with Pradeep, but let me come to Bala right now. We look at what's happening in the markets and what the election screen is, Bala, from a very trader and the day's point of view. But the fact is that right now, the kind of investments in mutual funds means that what happens on the screen is a matter of concern or involves hard saved money for crores of Indians. So for people who are watching this and are wondering kya hone wala hai, maybe a little concerned, they have their investments in and are in mutual funds, etc. Give us that picture that at the end of the day, it's about the India story, isn't it?
Yeah, Taman, I think if you look at from mutual investors' point of view, so I would probably say they are the largest beneficiary of the Indian market doing well on the back of Indian economy doing well in the last 3 and 5 years. If you look at the inflows that started coming to the MF industries after the 2019, 2020, credit market crisis, and subsequent to that, the fall that we saw post-COVID, the significant flows came to the two period, one till 2018, and then from 2021 till date, we have seen the continuous flows coming in. And if you look at all the investors who have put money and stayed invested in the mutual fund for the last, say, 10, 15, 20, 30 years, they have made a significant amount of money on the back of just staying invested on the conviction that, yes, Indian market will do well, on the back of Indian economy continue to do well. I think that story doesn't change. But as we move forward, this 1 or 2 days of volatility is something should not bother investors from their investment outlook point of view, because India will continue to remain one of the large market to look for, which is about 5 trillion economy. When 10 trillion economy is not in doubt. Economy growing at about 8.2% is not in doubt. Economy interest rate remaining somewhat stable, therefore more private capex will come on the back of government funding. Nothing is going to change. Fiscal is not going to change. Of course, the political dynamics will keep on evolving. But what we have seen in the last so many number of years, policy continuity has been the biggest boon for India, irrespective of whichever the style of operating of the political party is. That's the way it has been. Therefore, from the investors' point of view, I think they have to stay convinced that, yes, they have to make investments in equity for long term. But at the same time, somebody has come only looking at the last 1 year return and say, I'll have to probably repeat the same return for the next 1 year. That probably may put them in a disappointment. But I think if they look at beyond 3 to 5 year kind of period, I think the mutual fund investors will continue to be the large beneficiary. In fact, I did some bit of math, especially when FIs were selling in India, the mutual funds investors have been the large beneficiary of the outperformance that has come in Indian market, because Indian investors have been participating in India growth story through the mutual fund vehicle. That's something I see as a big change that Indian investors would have experienced compared to the early period, maybe about 5-6 years back.
Yeah, so that's important, isn't it? That's the big picture. I'm not sure if Prateek is still with us. Prateek, if you can hear me.
I'm there.
Yeah. Okay. So.
Yeah, I can hear you.
So you know, the thing is, and this consistently has been the narrative and the fact that the India story is an ongoing story. We are the largest population in the world. We have shown grit on how to grow, and we've seen that in the last 10 years as well. As of now, what the picture is showing is policy continuity, exactly what the street wanted. Yes, politically, maybe the situation at the end of the day would be slightly different from what most people expected, but that's politically. In terms of policy decision, which is at the end of the day what the street sees, would it be fair to say nothing really has changed?
So, yes, as of now, those are the thoughts, but let us see how the portfolios get